Good morning and good morning. Truly hope that everybody had a great night of sleep and are ready to get this thing going. I am Jamie Irvin, filling in for Arlissa on this morning. I am ready to hop into the market, and I hope that you are as well. Let's get this party started. The Dow Jones futures, the Dow futures is up 0.17%, S&P futures up 0.28, NAS futures up 0.26. And then we have for the US, Russell 2K was last reported down 1.60%, and the VIX is down 1.25%. We are down to 12.61. Asia last reported all down. HSI was down the most, which is Hong Kong. Korea was down. That's Kospi, 1.26%. But everything almost was pretty much down about 1%, except for Shanghai. Hong Kong stocks lead losses in Asia Pacific after Wall Street tumbles on rate worries. Europe also mostly down. Down the most was stocks 600, but European stocks follow global markets lower as interest rate outlook weighs on sentiment. So we have had this conversation before multiple times about how currencies, markets, they're intertwined. What happens in one area can impact another area, not just on disasters and things of that nature, but also, each country has its own gross domestic product, and they're trying to, you know, get other countries to buy their goods and services, et cetera, et cetera. So all of these things come into play. Very different countries are investing in each other, things like that. So this stuff does make a difference, even though it may not seem to impact our dollar in our pocket directly sometimes. So this is SPX. We just want to take a peek at it real quick at the beginning. We're about to do our Mancini numbers pretty soon, but this is what happened on yesterday. When it gapped up in the morning, it sat here. This is the 15-minute time frame. This red block is what Mancini had as the area where it needed to. If it goes below this, then we would sell heading down. That's exactly what happened in the first half an hour. It dropped, came back to retest that, and kept moving down. Around 1:30, I believe, 2 o'clock, there was one of those red or orange folders happening yesterday. And so I wasn't all that shocked that it started dropping, but this was the movement that it made. So it'll be interesting to see how today unfolds. So on the 15-minute chart, I just have the levels set to what it did on the 15-minute chart for SPX on yesterday. So of course we'll be moving this around for our Mancini numbers. Let's take a look at that. Mancini. So this is what we got. Yesterday, SPX put in its largest red day since April 30th. My sell target / bounce zone was 52.54 as posted. We sold to 52.54 exact and bounced. 52.85 was first target, arriving now. Plan today, 52.75 equals support. So as long as we're above 52.89, 52.98 is the next big resistance. If 52.75 fails, we dipped to 52.65, 52.46. Right? So for my purposes, what I'll do is go 52.75 And I'll put that right here. Let's see, we'll do 275. It's good enough right there. And we'll just make this this is a rectangle that I'm using, but bringing it close like it's a line. All right. This morning, this is gapped up already for this morning. So we're going to mark the gap knowing that it is probably going to change. The first resistance that this will hit is right around here, which is about 52.87, of course. That's part of the numbers that we were given as the resistance anyway, but this is what it looks like on the SPX chart, right? The next one to me would be 52.99. Just because this is where price turned around. So trying to head back up, we got these resistance points. So we'll come back to this and take a look at it. But we're going to get ready to start marking this for our 15-minute breakout, right? So do is pull this up. And I'm actually going to keep this about right here, but I'm going to use the regular solid line to give us some distinction. And I'll even go something like this. I'll do it this way, right? Solid. Oops. My bad. It should have been a solid line. So this will give us some distinction on what we're looking at. So when we come back to it a little bit later, we'll know which line is which. These lines that are turning points can be some very telling lines in terms of reminders of where price was or could be going. So that's why I'm putting these in here as such. Dotted lines is where it turned around before. These purple lines is a representation for me of where the gaps are. So now we'll just watch and see. It's a big gap. It may or may not fill, but we do know that if it goes below this red, this is the Mancini zone. So if it breaks past that, then you know we got some selling to do. All right. So let's keep it pushing. So that's what those are, Mancini numbers. Now, sometimes what we will do is we'll even mark 52.89 as being the first resistance, which is, that's something you could do as well. And really all you would do in this case is just duplicate this line and go 52.89. If you want to do that, nothing wrong with it. And I'll just put Mancini resist, right? So that's what that line is right there. That's the first one that he mentioned. And going above it is another one. So, and then the other one was, we'll say 52. Put that in there as the one on the bottom. Right. So these are some of the Mancini numbers. 52, 45. Put that in as support. It may break past those and keep going down, but at least we have an idea of what could happen. Right. So this is a resistance line, which is already up near that anyway. So we'll come back and we will check it out in a little bit. All right. So we are wrapping up Sim May. We started beginning of May. We all chose a strategy or two that we wanted to rinse and repeat and test out in our sim. And so that was different for everybody. Everybody, chose whatever they wanted to choose. So we got one more week of that. And the idea was to, really learn this particular strategy or hone in on the strategy and not risk any real money until the strategy was proven to work. So that was the idea for Sim May. And so that is wrapping up one more week. So good morning, Lady T. Good morning, Nori. Thanks for joining. We're not there. We're not here at the declaration yet. Let us look at what's going down. We could actually go to the live one, but we had core durable goods orders month over month. This was did pretty good. In other words, positive for the economy. We got and by the way, G7 meetings are all day, so that's a good thing to look up and research is the G7 meetings. You could say 7 of the top dog countries. But that's an orange folder that was at 8:30. Durable good orders month over month. So the difference between these is this is core durable goods, and then this is durable goods. So there's usually one thing, or not one thing, but there's usually a little bit of things that are different that they are measuring between the two. But 0.7% and it's green was good for the economy. Again, both of those were orange folders. 9:35, FOMC member Waller speaks, orange folder. And then at 10 o'clock, we have one red folder, revised, the University of Michigan consumer sentiment, right? And a yellow folder, revised, University of Michigan inflation expectations. This is our 10 o'clock turnaround that we're always talking about when we have things happening. Or shall I say, 10 o'clock turnaround is when we see on the chart there might be a switch up. But these types of events, I notice either before market open, but right up to about 10, sometimes 10:30, you may see something happening. So a red folder, orange folder, right before that time frame would not surprise me, depending on what's being said over here. So that is for Forex Factory. Investing.com, again, reporting the same information. So before we were talking about core durable goods versus durable goods and their orders. So over here, the core durable good orders month over month for April was 2 stars. 3 stars is a durable good orders month over month for April. Durables excluding defense is only 1 star month over month for April. And durables excluding transport is 1 star as well. There was no effect for the durable goods excluding defense month over month for April, but we got some green for the last two, right? Durable goods excluding transport month over month and good orders non-defense excluding air month over month for April. Those are 1 stars, green, so we're good. Fed Waller speaks. This is 9:35. This is 2 stars over here. And here we are again at the Michigan 1-year inflation expectations for May. That's 2 stars. The 5-year inflation expectations for May is 2 stars, as well as the Michigan consumer expectations for May. Right, all of those are 2 stars, and the consumer sentiment for May as well. Then you have a 1-star event in the same time frame for the Michigan current conditions for May. And then we're going to have a 2-star Atlanta Fed GDP now Q2, which we have seen this one before as well. And then there's a run of U.S. Baker Hughes. It's the oil rig count is 2 stars. The total rig count is 2 stars. Then we have the CFTC speculative net positions. There's aluminum, copper, corn, crude oil. Crude oil is a 2-star in this situation. This is starting at 2:30. We got gold, which is 2 stars. NASDAQ 100, 2 stars. And then natural gas. We got the S&P 500. Speculative net positions, that's 2 stars. Silver, soybean, and wheat are also on this list, and they are 1 star. So that means at 2:30, we still have some things that are happening. We got some stuff at 1 o'clock. These two right here, both are 2 stars, and then a nice little run at 2:30. And we're out of the market not long after that. All right. let us take a look at earnings. Part of our list on today for let's say movers, pre-market movers, was some of these. Intuit and Workday made the list that CNBC had. We got after close yesterday was Decker's Brand, Intuit Ross, Workday, Silvercorp Metals, Emerin, Stepstone Woodmark, Cavco, and Lionsgate. And then this morning, Mesa Labs is what reported this morning. So we didn't see as much, let's say, obviously is NVIDIA over here. Yesterday morning, there was a little, I guess you could say, fluctuation if you want to use that word. So that's what happened on that side. So for our 15-minute breakout, we're just going to take a peek, see what's going on. We're going to raise the roof a little bit. And it bounced off, and looks like it's the Bears and the Bulls are having a little bit of a fight. So I don't remember if I said this already, but good morning to everybody. Lady T, Nori, Lisa Henry, good morning. Ward, good morning. I see tickers, Amazon, Apple, Google. I don't know if Nori put GM for General Motors, if GM for good morning. BAC is Bank of America, and I see Netflix. All right. So we will build the list. So in terms of our regular pre-market information for segment 1, that is what we have for today. So I know that some people jump on just to get that information. So that is what we have. Let's swing around real quick and look at, so the Dow Jones right now is up 0.23%. S&P 500 is up 0.38%. NASDAQ is up 0.39%. Russell 2K is down 1.60%. And the VIX is down 1.80%. So the VIX has decided to get less intense. So we're going to do Apple. We're going to do BAC, Google, G. All right. I'll make sure we get everybody in here. Netflix. All right. That's our list for today. So let's start with Amazon. See what we got. Amazon is did a little bit of a pullback, but it's literally, in my opinion, in a boxing match right here. This is a month's worth of prices. So for the Bulls and the Bears to be fighting, whew, they are for real duking it out. But in my opinion, the sellers are mostly winning this candle because it's closer to the bottom. But the buyers are holding their own right now when it comes to this monthly candle. But here's a strong buyer zone here. And you'll see that a lot of tech stocks are at highs right now. So anything you see in this situation with some of these tech stocks, it won't be a surprise if some of these charts start looking the same. By the way, shout out to all the people who tune in on our replays. We appreciate it. We definitely want to acknowledge that. We have been seeing in the analytics that we get replays, so that's awesome. Appreciate the support and hope that we're providing you with what you need on a regular basis. Always feel free to drop any questions in the questions area, the comments area, and we will get to them as soon as we possibly can. So just because you're watching a replay don't mean you can't get any questions answered. That's what I'm trying to say with that one. So we got this happening. I'm just marking some of these turnaround points. So when we get down to the weekly, you can check that out. See, pretty much basing in this area, trying to make a decision on what it wants to do. But the fact that these buyers are right here pushing this up, man, you got buyers and sellers just duking it out. That's all it really is. Waiting to see what's going to happen. Again, because it's so high up in the all-time high area, there's no seller zone. There's nothing definitive up there. It's essentially retesting. Amazon right now is retesting. This is from 2021 over here, July of 2021. So on the weekly chart, we got July of 2021. So when July came back, November, that's November. Came back in November, and now it's coming back here again and retesting the same area. This is on the weekly chart. So on the daily, we have a downtrend, and it's hitting this area right here, which this is one of those lines that one of those areas where you see plenty of movement. It has been support and resistance before. So that's going to be important for us when we get ready to look at the options chain to see what we would get into. For those of you who haven't yet, thank you, Lady T, because I was just about to say, if anybody put in the ticker, if you want to let us know either where you got in at or where you're thinking about getting in on the ticker that you posted, that would be awesome. You'll be following what Lady T is doing. Good morning, Tamar. So this is that line that it's been bouncing off of, right? And it has hit this line more than once. So that's one thing I will be definitely looking at. There is a strong buyer zone down here. Leg in, base, leg out. Pretty strong. And now again, we're at highs, right? So the likelihood of us finding any kind of legit sell zone, it kind of dwindles. Trying to find something that might make sense. So the first thing I'll do is switch just to this line chart to see if any of this looks like something we would mark. In other words, if it looked like a chair, the actual chair, that's too dark for you guys. So let me switch this. We use the line chart just to gain some clarity on what we're seeing because it smooths everything out. What we'll do is go to appearance and line chart. So whatever's up, we'll say green. If it's down, we'll say red. That'll be fine. Neutral. Let's go with that. All right. So this right here looks more like a lounge chair, a gamer's chair. Yeah. This one right here, same thing. You chilling in a massage chair. So some people wouldn't count these as quote unquote chairs when it comes to the formation. So it really just depends on how you prefer to chart it. Personally, I'm just trying to find a seller zone that I think would work. Up here will be the one on the daily chart. I really don't see what else would be a chair or anything of that nature. This looks more like momentum candle to me. So this has a little bit of a gap here. So I would say leg in, base, leg out. But in those choppy areas, I'm also more prone to look and see, what's going on the weekly and on the 4 hour. But again, because of where we are on the chart, we're so high up that we may not find any type of, point that's gonna be definitive for what we're trying to do. But does not hurt to look and check it out and see. So if there was gonna be something, I guess it would be this right here. little leg in base and a large leg out. If it was going to be anything, that's what I would see. So as of right now, with these two in their boxing match, the buyers and the sellers, you can go either way in terms of being above or below. Um, you may even possibly, and I'm saying you, but I'm saying any you being the general you, not investment advice at all. But I'll change that to say what I would be doing. How about that? So I actually put in something for next week. I think this was yesterday, right? It's 85% out of the money as of right now. If I was looking, so in my case, I would be looking to do a iron condor. This is a 2.5 spread, which is $250 of collateral. In this case, this will be 76% out of the money. This will be 86%. Y'all know I'm normally chicken, and we'll go with the 87. But this is so close to, and now normally I'm not even trying to get in at this particular time on my live account. But our calls, our broadcasts are very short, so short. Put that in quotations, but we can't take forever to make these decisions. But this is where I'll be looking to get in right here. 2.5 spread, 37, 36, 37. That's over 10% of 250. So I'll be all right with that. You can always, of course, increase this number or decrease the credit that you're going to receive. And I would do YouTube AM. All right. It always accepts faster when it is in the SAM. So that's what I'll be looking at. Again, I went to the next week. So that iron condor is for next week. If I was trying to do something for today, this would be 180. You cutting it close. 78% out of the money though. So you're looking at 20 cents for 250 spread. So it's not quite 10%. But if I was gonna do the iron condor with it or something, I will be checking to see that. I don't see premiums over here. This is 71%. I would not ever go below 75%. Barely hanging on to 80%. So for me, I wouldn't be trying to get into anything, but at 75%, I probably would be watching this one over here, and then just look at increasing my credit. Right, you can always increase that. Let's say 25, make that 10% of your collateral, and at least you're getting at least that to get started with. If you're trying to get it to close on today, but I picked, of course, next week. Iron Condor would still be watching it. But those are the numbers that I will be looking at for Amazon. For Apple. And those are numbers for, I'm not sure when Lady T was planning on getting out of hers, but I would say I see 180, 177. That's right about here. So that's where she's looking. And as of right now, 74% out the money. Can you make TOS larger? I'm sorry. You know what? Sorry about that, y'all. My apologies. So let's go with Apple. Apple got to say. All right. Y'all don't get it twisted. No matter what you hear about Apple, no matter what they say about Apple, I just refuse to believe. I'm not saying this because I use their products. I'm saying this because of how much they have in terms of the amount of money makers they got. Apple's not about to go bankrupt. You always hear about, oh, Apple is going to be, oh, they're not going to make their estimate for this year or whatever, this quarter. Dude, they are not going bankrupt. They may not make what, what it was estimated, but don't act like they're about to go bankrupt. Because if they don't sell another iPhone, they got all kind of other stuff they got their hands in. So they got their main money maker, but they have diversified. Okay. So we got this. This is one of those. This is like a pole. This is a run up south to north on the monthly chart for Apple. But you see how it's in this channel. It's going sideways. Buyers and the sellers are about even. This looks like one of those. Let's see. Could be either one of these. Triple top, bears, bullish flag. And I'm just going by the direction of the leg and what it's doing. So I'll be watching to see what happens, because it could very well break out of here, because it keeps retesting this on the monthly chart. So it could come up and retest it and break out, or it could bounce, come down here. It all depends. But it's definitely something to keep an eye on. The weekly, obviously, it is trending up. Here's a great strong buyer zone down here in the 169, 170 area. And then you have one up here. It is in a seller zone right now. So this is the weekly seller zone up here that it has revisited. And what I would be doing here, since it's going in this direction, I would just be putting in a line right here, trend line, just to mark where it's at, direction that it's heading. I just got two of these lines touching. Honestly, it would not be, I guess, out of the realm of possibility if you even did it this way, right? So then all that would mean is that these came outside of this line, but it's still touching. Now it's three lines that is touching, and at least two of them, it's my understanding, need at least two lines to establish a trend. So in this case, that's what I'm looking at. So you can do either one of those, in my opinion. Down here, that's still two lines, or right here, probably touching 1, 2, 3, 4, right? We can make the argument for either one of those, but I just happen to notice that one. Again, right here, same thing. You can have this touching right here. I try to share all the ways that I've seen people do things, whether I do them that way or not. But this is two touching right here. Boom, boom, right there. Or if you want to bring it down and be a little more snug, you can bring it down about right there. These two lines are touching. That's the channel. Which all this means is that it bounced off this number, or this whatever, this trend line. So when we get to the daily, because we've been operating this on the weekly, you just see where it bounced off of the trend line, where it's at right now for today on the daily. This is where it's fighting. You got a seller zone up here, leg in, twin the base, leg out. That will put our 190. This would be your proximal line for 190. Your distal line will be 192. So this will be your range. I'll be looking to go outside of 192 because price is heading down right now. If you were trying to get in for today, you would have to go for 77% out the money. This is 190. So it's up to you if you would want to Matter of fact, I would even go 189 plus 1.5. So that'd be 190.5. Right? So that's 76% out the money. Okay, which will get you 18 cents. Again, not quite 20%, or 10, sorry, not quite 10% of this, which is $250 collateral. So you would need that to be 0.25. Again, in this situation, you can always enter. You want it to expire worthless, obviously, and it is dropping currently. So that's one way to look at it. You can pick up that. Then this is 84% out the money right here, right? 187.5. So even though this is close, the out the money is better for Apple on the put credit spread side. So if you did the put credit spread side, or if I did the put credit spread side, it would be out the money 83%. We all know anything can happen, especially during those orange folders, but combined, now you would be looking at between both of them. If I forgot to put the thing on there. If it accepts, then we'd be looking at a total of 29%. I'm sorry. Well, yeah, technically it would be 29%. So 29 cents on this is a 2.5 spread. So 29 cents over 10% on collateral. So I would be okay with that, especially based on the numbers that I saw. So I'm not sure what numbers someone was looking at for that, but that's how I would attack Apple. And just kind of sit and wait to see what happened. And just know that it's going to fluctuate, right? They have good. This is a strong leg out right here. I don't care for the leg in, but there's a couple things that can be done in terms of the way this is charted, outside of just ignoring it totally. But that's a strong leg out right there. And I will be marking in here where this is hit it before, came back, bounced off of it again. So this area, would be another area where I would look and say, some can go down. It may come down there and stop again. So I would be just adding that in. And don't forget, you got all kind of indicators that you could use to see how to support what you want to do or what you're seeing in the charts. So this was a gap up on the daily. We definitely want to make sure we acknowledge that. I'll put it right there. So this is the gap. This is the trend line from the weekly. And then this is one of those parity lines that has been hit more than once. So there's something to watch and see what's happening. Apple is giving us a doji so far for today, but even though it's a doji, that means that there's indecision happening. But as indecisive as that is, it looks like the bears are trying to push that up. At least that's the way it looks right now. Let's take a swing back to SPX and see if we got any breakout, any type of breakout movement. It has not broken out quite yet. Another way to say that is it's trying to break out, but it's getting rejected by the sellers, right? So we got 3 candles in a row. This is the first one. So it kind of came out down here. Buyers pushed it up. Next candle, sellers pushed it down. So this will be one to watch. Probably over the next, probably say 15, 20 minutes, possibly, because we got those folders that we looked at earlier. So let's look at Bank of America. Bank of America, pretty stable in terms of banks, but I will say the ATR on Bank of America is it's highly liquid, but it's not a fast mover at all, which actually could be good, I guess, depending on how you're trying to trade it. So I'm just going to mark this on the monthly. This is where it's at right now. So it just broke out of its recent high. This is a cheer. 2 on the base, leg in, 2 on the base, leg out. So I'll be looking at that. As what it would be hitting when it comes back down. That's what I'm looking at. Then I would do this down here. This is a pretty strong leg out as well. Looks like it's going up yonder. So now here's the thing. Up here, what I see is, if I was trying to do this like regular, how we regularly chart, I would have to probably use this as a leg out. I don't know if I would consider this to be a base. In other words, I don't know if I will see this as a chair. This looks more like a momentum candle to me. But I can see how somebody would look at that as a chair and mark it as a chair. This is what that would look like if they chose to do so. It'll be looking like this. All right. Leg in, base, leg out. That's how that would look if they wanted to do it that way. This is coming out of a seller zone. So that's another reason why on the monthly, it makes sense to mark this as well. Even though I was marking the levels that it was turning, it's coming out of a seller zone anyway. So we're watching that one as it happens. But some people would mark it like this, leg in, base, leg out. I can't say I would be against it, but what would give me hesitation is that this middle candle has this wick that came all the way down here, making it almost as long as the leg out candle. And normally we want this middle candle to be a lot smaller. We want the middle candle to be something like these, because then that represents that there was actually some type of change in between there. In this case, I really don't see that. I see that as more momentum. But again, all this is, subjective. I probably would be a little more comfortable with going, I'll just put it here, small leg in, these 4 in the base. This would be leg out, even though I hate this kind of leg out right here, but still. And then you can wait to see what happens. Either one of those, I think, as long as you understand what's happening, that we're in the seller zone, it's either one of them is fine. Depending on, I'm saying using the word fine, but I'm really trying to say, just make sure that whatever you decide, you sticking to, what you believe in it, because you're risking your money. So to me, charting is really about like, okay, how comfortable do you feel putting your money on the line for that? In this case, I don't feel all that comfortable with either one of these, because the formations are not as clear as I like. So when I go down to the weekly, I'll be looking to see if there's something there. And there is right here. So I'll be using this weekly one. I'll be using this weekly seller zone right here for March of 22. All right, so all I did was just go down one time frame, and we did it that way. monthly. So I really didn't see anything that made sense in that situation. So we can get rid of all of that. And this is the area on the weekly. And there's two seller zones right together. Go with this one. Again, here's another one where you got this super long base candle right here. I don't know if I really don't care for that as part of the formation, but I'm okay with this. Leg in, base, leg out. I don't really consider this a shear formation. It feels more like a momentum thing for me. But if you treat it as a shear, no problem. Like I would not say that it's wrong. In fact, I understand it. But so what we got right here. Now see this guy, I'm okay with this one being a cheer. Right here. It's been revisited a few times, but let's say yeah, I'm cool with this one. This one seems like more of a leg in, base, leg out. It may have been revisited down there. This one after it does not count as a revisit. But you see how this base candle is smaller than this one, especially in comparison to these wicks. So I'll be okay with that. So it should be in this. It might even just be sitting in this zone. This is on a weekly. So that's where it's coming into, is that chair formation on the weekly. All right. See what's happening. So on the daily, we got a gap right there. And then we have a seller zone, leg in, base, leg out. So I'll be looking at that gap right there. Actually, I will go this direction, go green, and then we'll hit the options chain to see what kind of money we talking. What type of money we talking? Right? Depending on how you wanted to do this, I was looking at it as a small leg in with a gap out. There's probably a couple different ways you can look at all of this now that I'm seeing it. I know a couple people that would do leg in, 3 in the base with this type of leg out right here. There are people who would do it this way, whereas this leg in, base, and then a gap up. There's people who would be like, I wouldn't even trade this. So I see there's some of everything that I've seen, but I think the general consensus would be that we have this here. And then again, we're looking on the weekly. So usually I don't mark the zones in this way, but they're the way they're standing out. So that will be what I see for that. And then weekly gap. So I want to make sure we acknowledge this is a gap, which we're going to see it anyway when we go down to the daily. Weekly, though, is a higher concentration of prices. So that's the reason I was marking this leg in, base, leg out, because we got such a strong gap up right here for that to be a leg out. I'm sorry, we're on the daily. I meant 4 hour. I would check to see on the 4 hour what's going down. See if there was anything. So you have a leg in, base, leg out right here in the seller zone. That's the one that is in. This is that weekly price point right here. So we just happen to look on the 30 minutes. It's skipping around on the 1 hour. There you go. All right. So technically it would be in a cheer on the 1 hour. There's a seller zone up here. Depending on how you want to do this, probably put all of that If you're going for the strongest leg out, it would be looking like that. So I would go, this is pushing up currently on Bank of America. And so since they're duking it out right here and we got this cushion and it's pushing up, I'll be looking at the credit spread first. I don't expect there to be too much in premiums for right now because of the time frame that we're working with. You have to be at like 39. I mean, you 91% out the money. There's no premiums right there. 86% out the money. There's no premiums right there. So you would have to go out further to see anything. This is 84% out the money. So I went to the following week. If you were doing it as a one, even if you did it as a one spread, that would be $100. You would only be getting $5 back for that. So I don't even know if you want to mess with that, unless you were doing like an iron condor type situation. Then that would be actually. I'm going for a one spread between these two, so that would be 8 cents. So if you want to do it that way, I guess that would be one way of looking at it. But the premiums are not all that great unless you're doing the iron condor type situation. That's how I'll be looking at that. Now, because of the way it's pushing up, you still have it is currently in a seller zone. So usually I'll mark those. It is trending upwards, right? These lows are higher, these highs are higher. So the fact that it's kind of turning around at that share that we not acknowledge shouldn't be a surprise. But since it doesn't do a whole lot of moving, I definitely would have to watch that. So as of right now, I would say no premiums until next week. But if I was going to do that one, I would be doing it as an iron condor for starters. That's how I would see that one. All right, swing back around. See what SPX is talking about. All right, no breakout yet. Still fighting with the sellers. Still fighting with the sellers right here. All right, you know who I forgot to I think Janae came up with the name Russette. I was looking for a girl name for Russell 2000, and I think Russette is what she came up with, and I like that one. Russette. So this is the 15-minute chart on the Russell 2000. So it actually had its own breakout, right? It had its own breakout, but it broke to the downside and then started pushing up. This is a chair. Matter of fact, let me do it this way so you can see it. She said, I'm not comfortable with the iron condor yet. I'll wait. I don't blame you. I do not blame you. So we're going to acknowledge this gap here to make sure we do not ignore it. Okay. And we're going to duplicate. And if you are on Thinkorswim, I always forget this. You can duplicate once you select and you see it change color. select the line or object, you hit the space bar, it will duplicate it for you. So in this case, it is in the seller zone. We're on the 15-minute chart, but it is in a seller zone because it gapped up. You consider that a leg, and then middle candle, leg out, so like it's trying to break past here. But right here, leg in, 2-minute base, leg out. This is the shear formation that it is sitting here trying to push its way through. All right, so we do have that. And I would say I would look at this as a resistance spot. And I would also be looking at this one, the one it's in. And why? Because the price turned around right here on the 15-minute chart, right? And then it turned around here as well. So those points where it turns around, that's where I'll be looking. Matter of fact, because of what it's doing right here, this will be the one coming up, right? If it starts breaking out, we want to, catch that. But to have an idea of which direction it's traveling helps when it's time for our decision making. If this is a shear formation here, right? This will be the 2 in the base. This one is dotted because this is where price is turned around. What I would do is put a alert on 265. I'm saying 265, I meant 2065. So if it comes up and it hits 2065, then that's telling me it's rising up. Hits that, I'll come back and check it. So that's Russell. Netflix is next. Oh, we had Google, Netflix, and then good, Netflix, Hood. All right. Let's do this one. I'll start this on weekly just to cut out some time for you. So this one is also at highs. Yep. Google is at highs as well. So what we did here is on the weekly, that's what these lines are, establishing the weekly trend right here. The green lines are for our daily. These are where it turned around on the daily chart. We'll look at that in a second. But that's what these are. So this is the trend that is still in there. It bounced off this higher trend area. These brown ones are for the 4 hours. So let's go with daily. All right, so this is the 4 hour in here. It's already in its yellow trend. There was a gap right here on the daily. Right, so this was a buyer's gap. So actually, no, I'm wrong. Actually, no, that's right. It gapped up here and then started coming back around. So it just come down here to retest it a couple times, and this is where it's at right now on the Google. Right, so this is the seller zone. I would say leg in. I probably do leg in 3 in the base and leg out. Right, the 4 hour is showing us, it has its own thing, which we'll take a look at in a second. If somebody wanted to say that this was a cheer, leg in, base, leg out, I wouldn't be mad at them. I will say that even if it's not considered a cheer, I do see that the zone is creating some type of situation for him. So I wouldn't be against it. I get it. This is the same type of deal. The wicks are a little bit too long for me here, but that's fine. So I'll be looking at leg in 3 in the base, leg out right there, and then probably it being in the zone right here, which puts these zones together and gives me the impression that something is about to happen. But I would also probably put this in there as well, some variation, or at the very least, mark this as a potential area that something might happen. So in this case, if I'm looking at the daily, I will be above Google. I may even have something in for Google right now. So if I'm going above it, there's 84%. This is a 2.5 spread, which would mean I would want to make sure I'm getting like 25. I would want 10% of that total price between the two if I did an iron condor. So this would be 11 cent, right? Just $250. That's 11 cent. Okay, 12 cent. Let's look and see what. So this is 80% out the money over here. 175 be the strike. So 12 and what was it? 11 or 12? You're looking at 20. So it's not quite 20%. Or I keep saying 20%. It's not quite 10% of your collateral, but you can always increase those numbers if you want to do it that way. In terms of iron condor, that will be expiring today. So as of right now, this is saying 79% out the money, and then this one is saying 82% out the money. So it's expiring today. So everybody knows that 80%. So let's see what happens. 12. And this is 81% sitting right there. Now, again, we still got, orange folders and a couple other things happening throughout the day. So I would be more comfortable with this one being above price than I would be with this one, which is where price is going. Right. But since there's this fight right here, it could go either way. But I'll feel way more comfortable with this one. So that's the one I will stick with first, and then I will go back and check it. All right. We also have Netflix. Now, again, I was saying that too, if we want something to expire today. All right. If you're trying to go for next week, you're going to have, more premiums to work with. And you would be at, here's 78% out the money, right? This is a 2.5 spread still. And you would be getting 31 cents on that side. So that's $31 by itself on 250. So you're definitely getting that 10% of the collateral if you want to go that route. This is 79%, 78%. So this would be 34 cents. So the way it's bouncing around, I mean, you can get some decent premiums going out for the next week. I keep saying you, I should be saying I could get some premiums because non-investors, Netflix, and then Hood. All right, Netflix. Let's see what you got. Netflix has been doing all right with their stock prices. Netflix is currently in a seller zone. We are hitting them all-time high type areas. So here's the seller zone that it is in. It's finally broken through there. That's what happened right there. This is I would consider this a cheer. Definitely cheer formation on the monthly. Then there's another buyer zone right below it. It is trending up, and the fact that it's hitting this channel, the fact that it's in this channel and hitting this seller zone lets me know something is going down. It's just kind of moving sideways while I was trying to break up through there. So let me just grab that real quick. It's got a feeling this is going to be one of those charts to have. We might see some decent zones since they're so strong on the monthly. We might see something on the weekly or daily that will be some good strong zones as well. I'll put this here. I'll put that one there. I could also put this one at the top of this one because I'm just looking at where it turned around in price right here. So it did, it has retested this line here and here as well. I chose this line because it's the one that's would be considered closer to price. But I would not have a problem, having an extra line there, even if I did it in a different color, just to acknowledge that price has turned around right here before. So that's really what that's all about. And here, as a matter of fact. So I do that so that when we're looking at the chart, we know what the previous levels were. There you go. We know what the previous levels were. So we know what our expectation is of what could happen. This is doing its run up. So this monthly price right here gave it its wings, if you will. This is another place where it based, but it did it on the weekly. So I'm going to put that in yellow. On the weekly. So this was a monthly price point, pushed up. This is his last seller zone, last high on the weekly that it is breaking up past. So we should see some nice little something on the daily. So on this daily chart, what we got is it is retesting this weekly line currently. This weekly line was support before, or shall I say was resistance before. So it has broken through that. Right? And it is ready to party. It'll look like it's has formed what will be a buyer zone in that section. I personally would probably be looking at, since it's breaking past it and heading on up, I would have to go back here and look. What is this week? Week is 3 years, so that means we got to go back a little bit more. Let's go. We're gonna make this a 5-year week, so we can push it back a little bit further and do this. Couldn't see it on the daily either. This is what is breaking past, so we're gonna go right up here for the weekly, and let's see. You got a couple options here. If you want to go up here, I would say something like this. And I'm just going to chart it because leg in, two in the base, leg out. This will be your leg out. That'll be the chair. This is the parity line that has been tapping on more than once. So what's happening there? So it is up there. Since it's up there in that zone or up there in that area, you're really not going to have too much that you can see in terms of a seller zone, because it really hasn't found its way in that seller zone area yet, outside of what we saw over here to the left. right? So this is what we're looking at right here in this area. Go daily, pull this down. There you go. Slide to the left. Right. So this would have been some variation of this, probably would have been a seller zone at some point, ugly leg in. But if we did leg in and 2 in the base and the leg out, somebody would try it that way, I'm sure. But I will be looking up here, which we basically have this marked off. Leg in, base, leg out, right here. That'll be the next zone. And yeah, I guess in terms of the daily, that's the only thing I see as a possible zone. It's sitting right there. I don't see anything else close that would be something you would do. We're already past this. So that probably would be the only thing. So let's do this. Since it looks suspect, what we'll do is we'll mark it with that. So I don't know what the thing is doing. Leg in, 2 in the base, leg out. But I would definitely look to see on the 4-hour if there was anything clearer. Sometimes that will clear some stuff up for you. But it may not be. But what I can say is Netflix is not playing around in terms of stock price. So I would be going to do a put credit spread here. I was just looking at the 4-hour to see if there was anything that will show up stronger in terms of formations. Since this is pushing up, I'll be down here on the put credit spread, which for this particular one. So that means that what price was there? I forgot when I put this in. But let's go with, can also go to next week. This is a 2.5 spread. I mean, I'll just, to get 10%, I'll just do it that way. Get 25 cents, so $25 on 250 collateral. To expire today is 84% out the money. This one over here is 84% out the money. Netflix does not have earnings coming up right now, so I wouldn't have a problem with the Iron Condor based on the way this is looking. Sellers are pushing down right here. So I would do here and here. So that's 655. 655 is up here. So we're above some support. We got some more stuff happening in between there, of course. But I will be okay in this case. The Iron Condor. So I will do that one. All right. Then hood. As in it's all good in the. All right. Wait, before we do hood, let me swing back to SPX. Get a peek at what it's doing. Did it do a breakout? Let's see. Oh, it did. It broke out and it hit a point, and now it is turning back around. This line right here is the line that was we put in for the 15-minute, right? So it pushed out. Now it is coming back down. So the idea would be to see If it retests this line, and it bounces off, that would be a signal, at least a piece of a signal that that might be something to take advantage of. So I'll be creating an alert, say at or below this number, and then we can say, since it's coming down, we'll say bearish retrace. Excuse my shorthand. Oh, really? That's what we doing that quick? Okay. All right. Something's wrong with that because I hit too fast. I must have had the wrong number in there. Again. Oh, I should have said below. Sorry. Or you do say at or below. Let's go with 52.89. So to send me an alert comes down far enough, which is what I wanted to do. Go. Come down far enough, tap that line. I can move this up, I think. Yeah. Let's go with here. Place it. There you go. So I want to be on par with the that top line. So if it comes down and taps that, then that lets me know that I can come back and check it and start watching it to see if it's gonna bounce or if it's gonna come back through. The breakout stuff can be kind of finicky sometimes. That's why I gotta definitely keep an eye on it. So we'll do hood. Appreciate y'all hanging out and giving us some tickers to look at. You know, some of these tickers, many of us may trade, but they definitely come up on at different times. Netflix is one that I actually do pay attention to. Usually, if it's in the tech space, I'm probably paying attention to it to some degree or am interested in it. For Robinhood has not been active in terms of IPO. Was not all that long ago. What is this? The 21st? I'm sorry, 21. So July of 2021. All right. So we have a tier formation in terms of a buyer zone right here. It is currently basing in this direction. So I would be doing this. And when we do these and chart these, one of the benefits of us, broadcasting, I guess you could say, on YouTube is like so we hit our number, in a week, 2 weeks, whatever time frame, you can always come back and look at what was charted and what has changed, because that information is valuable as well. So we got the time stamps, date stamps, etc. We put the date in the description, so it's easy to relocate. So that's what I have for the turning points. I'm using that as a turning point. This is a turning point, and this one could also use this one down here. Do that one as well. Depends on where you want to set that. But on the weekly, this is hit this monthly price point. It is retesting currently. There is a fight. Technically, what's really happening is the bears are trying to hold everything up for the week, and the sellers are pushing it down as best they can. This is a cheer. So for the weekly, This would be the buyer zone chair that I will be looking at. Technically speaking, you could be right here for a buyer zone because you have this leg out. So be like leg in, 1, 2, 3, 4 in the base, leg out, something like that. But this is definitely trying to fight its way through there. No doubt about it. So that'll be something to watch. This is not an all-time high. That's why I switched back to the monthly. This is not an all-time high. This is a recent high. All-time highs is like back here, right? The highest, technically the highest it's ever been is up here, but in terms of it, like a higher point to chart would be up here. So for the weekly, even though it's right there, we still got plenty of room to run. So we will have to go. I'll be looking right here for the next weekly zone. I'll go right there. If you got anything out of today's broadcast, if any of this resonated with you, please hit the like button. We greatly appreciate it. Our membership, educatortotrader.com. You can join our membership. We get together on our Telegram group. We are in that Telegram group regularly. When I say we, I mean everybody who's part of it. I love it because people are, asking questions and dropping their tickers. We laughing at stuff, we crying at losses, celebrating wins, the whole nine. So it's a great situation. I definitely can say I've grown being a part of it, so I enjoy it. All right. educatortotrader.com. So here's what we got right now. A lot of space right there too. All right. Go down to the daily. So here is our daily seller zone. Very clear. And it looks like price is starting to head on down. Whoops. Price is starting to head on down. So we're going to put this on. Right. Both of them are in the same price point area. This is a ugly buyer zone. But what I would be looking at is probably this. Leg in, base, but this gap up right here, I would be okay with. I'm not sure how I feel about these three in a base for a chair. I can see why somebody would do that, but what I would be doing right here is just acknowledging that there is a gap here. So how I would play that out. So we got a leg in base. We have a gap up, so we're acknowledging the gap. It has been retested. Buyers pushed off. It was a buyer's gap to begin with. This continues down. We can expect it to hit this, possibly bounce again. And then right here, we have price point that has been hit multiple times in the past as well. It's on the daily. So this looks like another possible iron condor type of situation. But it depends on when you're trying to get in. There's not that much in premiums right now. 73% out the money, 89% out the money. No real premiums on either side. You will have to look at the following week. This is a 50-cent spread. So for $50 of collateral, if you're starting at the top, that would be $5. Technically, that's 10%. What I would be doing in this situation, though, I usually just make it a one spread. And then you can always increase this amount. So that would be 10% of what I want to take in. Or shall I say 10% of the collateral for one spread, which is $100. So I'll be looking at it that way. All right. Yep. And this is kind of sitting on that line, and buyers are pushing up right there. So, but this will be for next week's expiration. All right. This is over 75% out the money on the put credit spread side. So normally I wouldn't be messing up. Now, again, because we got stuff coming up later today, that may push the market down a little bit more. That will make me skeptical about getting into most of the put credit spread stuff, because put credit spread is saying I think price will go up. Well, you might slam down into a price. So I'm a little bit skeptical about doing that stuff. But that's what I have today. I don't see any more tickers. I think we knocked everything out. I would definitely be doing so. It looked like most of these were call credit spreads for what we looked at today. And let's see what we got. All right. So this is Russell. And Russell should have been here and here. There you go. So it's still trying to break out of there. Taking its time. I got a feeling the next couple hours is going to really show us what we need to see. This is pushing up. It hasn't broken out, but it hasn't given any space over here on SPX. So during this stream, there hasn't been really any breakout as we would currently, how we like to see it happening. But I'm going to wrap this. Dow Jones Industrial Average currently is up 0.07%. S&P 500 is up 0.52%. NASDAQ is up 0.78%. And the Russell 2K is up 0.80%. So we're all green for the United States. The VIX is down 4.39%, which is what you want for the VIX to be down if you're bullish. Because if this is going down, chances are these are going up. Our ETT daily declaration. By faith, I'm a successful trader. I'm a wise and knowledgeable trader. I make smart and lucrative decisions for my portfolios. Money likes me because money is comfortable around me. It is drawn to me. ETT daily prayer. Lord, give us wisdom and knowledge for our trades today. Help us to make smart and lucrative decisions for our portfolios. Okie dokie, everybody. Thank you very much for hanging out with us. Again, if you enjoyed anything from today's stream, don't forget to hit that like button. We'd appreciate it. Consider subscribing and or joining our membership, educatortotrader.com. I'm Jamie Irvin. Hope you enjoyed yourself. Don't forget to stay green and get this money. All right, we'll see you in Telegram. Again, leave a comment in the I almost call it the downstairs area. in the comment area if you so choose. We'll get back to you as soon as we can. You all have a great trading day and a profitable trading day. Adios.